Hey, welcome back to YT Finance, and this is the channel where I went to business school so you didn't have to, and today we are talking about the best dividend stocks that you can buy right now for amazing passive income, regardless about how high the stock market is or how low it is. So we are going to structure this passive income dividend portfolio to provide us fantastic returns in both growth and dividends, so our returns are going to be proportional or even beat the overall stock market while it's booming or even while it's falling. So overall, this is going to be a very well-rounded portfolio, mainly for long-term dividend investors. So we really need to pay attention to the quality of the companies that we are going to be investing into. We want to make sure that these companies are fundamentally strong, that they carry low debt, that they have reasonable supports from a technical analysis standpoint. We want to make sure that their growth is sustainable, and we want them to be growing their dividends or already have a very high dividend yield. We also want to make sure we're getting good deals on these companies, so we want to invest into companies that are relatively low in price and are reasonably priced compared to their all-time highs. So our goal here is to attain financial freedom by owning assets that generate passive income such as dividend stocks, and we want these dividends and our wealth to increase over time in a very meaningful manner. So if that sounds fantastic to you, then you're in the right place, you're watching the right video, and please smash this like button right now for more videos like this one. Subscribe if you are new, and comment your favorite dividend stocks or even your favorite dividend ETFs down below. And now let's jump right into today's stories. So before I get into the information, this is going to be a quick snapshot of the companies and the data that we are going to be looking at, so you know that these companies are fundamentally very sound. We're also going to whittle this down into various strategies that you can use pertaining to these various companies, and I will also go over which companies I think are the best. So we're going to go over the top 15 best companies, the top 10 best companies, as well as the top 5 best companies if you don't want to invest into all 30 of these companies. For more information, this Seeking Alpha article will be listed and linked in the description box down below, because I think the logic and reasoning behind these particular investments are absolutely phenomenal, and it's very similar to the way I personally invest. In this video, we're going to highlight 3 groups of 5 stocks each that have an average dividend yield as a group of 3.98%. However, we're also going to highlight another group that has a dividend yield of 5.74%, and then lastly is going to be our aggressive dividend income, which is going to go all the way up to a yield of around 7.31%. So for the 5 companies in our first conservative group, this is going to be for risk-averse investors, while the second group is going to be mainly for investors who are seeking a higher yield with a little more risk, and the third group is going to be very risky, however the dividends are absolutely fantastic. And if we combined these 15 companies all together, we get a very well-rounded overall portfolio that is going to bring in fantastic passive income that is very safe regardless of the current stock market environment. At minimum, we want to make sure our portfolio is generating dividends that are going to beat inflation. We also want to make sure the stock itself is appreciating while also accumulating dividends for us, which is going to give us returns of over 9 to 10% at a minimum. So we want to maximize the dividend yield, we want to make sure that the stock itself is also appreciating in price, and we want to be diversified in both high growth, low dividend, and high dividend, low growth stocks that takes into consideration companies from basically every sector of the economy to have a very well diversified portfolio that is going to lower our overall risks of any losses. On top of this, I would love for you to do your own due diligence on any of these stocks if you find them appealing, and I will also have slides that I will show you and even an Excel sheet that you can use in your day-to-day portfolio research. We also want to lay out criteria that we will be using for these particular companies. We want to make sure they have a market cap greater than 10 billion. We want to make sure their dividend yield is at least above 1.3%. We want the daily average volume to be over 100,000, and we want to make sure that they are aggressively increasing their dividend growth over the last 5 years. And that really narrows down our overall list. So initially, I'm going to show you 30 stocks that go through these various criterias of very strong current yield, fantastic dividend growth history, a solid payout ratio, dividend appreciation, strong EPS growth, the charter number is good. We want to make sure they have a reasonable debt to equity ratio or a debt to asset ratio. On top of the stock trading at a good discount from its 52-week high, on top of solid fundamentals and revenue growth. From the criteria that I just listed, we have taken around 3,000 stocks and narrowed that down to around 316 names, in which all 300 plus of these companies can be found on this particular Excel file that the author of the Seeking Alpha article has generated for us. However, what I mainly want to focus on is just the top 30 companies out of these 316 names, because why wouldn't we want to invest into the best? Now, why would we have that magic number of 30? Well, 30 companies and stocks allows us to be properly diversified while also getting fantastic gains, and I will show you that list of the 30 stocks right here. We have absolutely fantastic picks such as Target, Lowe's, Morgan Stanley, Home Depot, T. Rowe Price, Goldman Sachs, Intel, Best Buy, Texas Instruments, 3M, Rio Tinto, Sigma, BlackRock, Broadcom, Johnson & Johnson, Ally Financial, Procter & Gamble, and a lot of other fantastic companies. So this is going to be our top 30 list. If anything, please write down these ticker symbols, look at the data on screen. It goes over all of the criteria that we just went over together, and of course if you need definitions for any of these particular segments or columns, the definitions for those things are defined in the article, so make sure to check out the article and show the author of the article some love. But these are the top 30 companies that we're going to be working with, and honestly, all of these are fantastic picks in my personal opinion. So if you are currently making a passive income dividend portfolio that is going to perform very well in bear markets as well as bull markets, all 30 of these companies are going to make a very solid dividend and passive income portfolio. However, like I said earlier, we want to be very specific, and we're going to go over 3 particular groups and types of investors or investing strategies, and we're going to narrow this down to just 5 companies or 5 stocks per group. Also, you can see that we are not favoring one particular sector. We have all sectors basically of the entire economy, which is going to heavily protect us during any market downtrends, on top of the very strong dividend yields that we see. So now that we have our top 30 finalists, we want to narrow these down even more to have the best quality companies that are going to give us fantastic dividends. And how we do that is we're just going to follow the author's steps 1 through 5 about how to whittle these particular choices down. So I won't bore you with that. If you want more information, you can always go back and read this article, but I just want to show you some of the heavy hitters that we are going to be working with. Specifically, we're going to be looking at the financial services, banking, and insurance segments, which consist of these following companies, which are all really fantastic. We are diversified in business services, conglomerates, industrials, and chemicals, on top of materials, mining, and even gold, because commodity prices are anticipated to increase, especially during times of uncertainty or war. People always go back to investing into platinum, gold, and many other commodities. Now, I do actually separate completely from the author, because the author doesn't have any military defense companies, which I 100% disagree with. So, of course, I found a list of the top 8 best stocks that will perform very well in both times of peace and especially well during times of war. And this could literally save a portfolio from a complete crash. And those 8 best defense stocks are going to be Raytheon Technologies, General Dynamics, Northrop Grumman, and many other stocks. The only one I would personally add on this list that is not already on here would be companies like Lockheed Martin, and even potentially stocks like Honeywell as an honorable mention. So feel free to diversify into these best defense stocks, because not only do these have good dividends some of the time, they are also going to uphold and lift your portfolio during times of war and or uncertainty. But apart from that, we are very well diversified in consumer retail and others, communications, healthcare, technology, energy, utilities, and of course REITs, which are real estate investment trusts. But now let's get into the nitty-gritty of the top 5 best companies for particular conservative investors, medium to neutral investors, or very aggressive investors. So in our top A-list group for conservative long-term investors that have safe income with an average dividend yield that's pretty solid of around 3.98%, we have companies like T. Rowe Price, Home Depot, and other extremely solid companies. And if you want to see this in a graphical format, you can see them right here. So like like I said, we have very strong companies such as Rio Tinto, Texas Instruments, Air Products and Chemicals, on top of the ones that I already mentioned, such as Home Depot and T. Rowe Price. So overall, these are going to be the top 5 dividend yielding companies that have fantastic growth that is going to be perfect for safe long-term income dividend investors. However, if the income and the average yield is not enough for you, we can always move on to our second tier list, which is going to be our B tier, where we can increase our average dividend yield to around 5.74%, but our risk is also going to go up, and although we are going to experience a higher yield, our overall growth might actually suffer. But if you are doing this for passive income, tier list B and group C are probably going to be much better for you. So what kind of companies are in this particular list? Well, we actually have a repeat here of Rio Tinto, but on top of this, we have companies like Best Buy, Broadcom, Enbridge, and Altria Group. So these are fantastic growth and dividend companies, again, very well diversified across all sectors of the economy, and they are trading at a decent discount, specifically from their 52-week highs. However, Enbridge and Altria Group in this particular instance are almost trading at 52-week highs. So if that wasn't the case, this may even replace the A group in some instances, on top of having a very strong dividend yield for passive income investors. Now, lastly, we're going to move on to our last tier list, which are going to be our final C tier list. And when I rank them in A, B, or C, this is not saying that A is better than B or B is better than C. It honestly depends on what type of investor you are, the strategy you want, and how much income you want compared to the growth of the overall companies and stocks. So our C group is going to be for very high dividend yields, very great for passive income or people living off of income that they're generating from their investments. However, these are going to tend to be higher risks. And again, of course, we're going to have Rio Tinto in this group as well, and we will also have Altria Group, because these are fantastic companies that offer investors very good returns based on their dividend yields. Of course, we're also going to include our real estate investment trust in this particular group, so we can increase that dividend yield even more for that passive income. So the stats on this are very phenomenal. Now, personally, what I would do, I more gravitate to our A group because I am a safe long-term investor. However, I would actually say mixing the A, B, C group together is going to be fantastic, or if you really want a well-diversified income dividend portfolio, then I personally would just invest into all 30 of these top companies. But if you think this is too much work to actually go through and invest into all of these companies individually, you can always invest into ETFs such as VIG, SCHD, which are fantastic dividend ETFs that you can dollar cost average into regardless about what the current stock market is doing, and they will give you fantastic growth and long-term returns on top of decent dividend yields. So for more videos like this one, remember to go and smash that like button right now, subscribe if you are new, comment your thoughts down below, and I will see you in the next YT video.